Welcome, guys. Welcome to Confluence. So, in this video, I'll be illustrating to you how I trade with Confluence, and mostly I'll be showing you how I use support and resistance and trend lines, and how the market makes pushes then breathes, and it pushes whenever it pushes up, it breathes. So those are your market corrections. So when yeah. So what will begin or what we always begin with when we are plotting our charts is we have to plot our support and resistance. And remember, we plot our support and resistance from the weekly time frame, and then you break it down onto the daily and the 4 hour time frame. And make sure that or what I make sure I do is I interchange between the line chart and the candlestick chart, and whichever I'm seeing the edges at the time is the one that I use the most. So if an example here, and what we'll do is we'll change the weekly support and resistance to black, and we'll make it much thicker. So it is to touch significant areas, and this area is significant here because of this touches here, this touch here, and this touch here. So before we even go further, like, let me explain what support and resistance is. Support and resistance is essentially where price always bounces or turns when it gets there. So price must have turned at least twice at a certain price point for that price point to be called a support or a resistance area. So what I mean is, as we continue with plotting our weekly support and resistance, if you can see here, this zone, we can call it resistance because price has turned twice or more when it got there. The first time being here, turned once, turned twice here, then turned 3 times. So the price turned when it got to that price area or zone. So as we continue with our support and resistance on the weekly. So like on the weekly, I don't like drawing many support and resistance lines. I just like keeping it simple. At most three to five support and resistance on the weekly, and just to make sure your chart is not so cluttered. You can easily see what's happening, because the easier you see, the easier it is to trade. Because remember, we're always trying to make trading easier for us. So as you move down to the daily, we'll change the dailies to red and less thicker, just to be normal thick. So as I interchange, like always, there's a touch here, there's a touch here, there's a touch here, there's a touch here. So the price turned at least 4 times. So remember, the price has to turn at least twice. As long as it's turned twice, then that area can be said to be a support zone or a resistance zone. This is a very significant area here. You can see the touches. So in between the weekly support and resistance lines, you will often find at least two support and resistance areas, 2 to 4 as well. So just aim at getting 2 to 4 in between the weekly support and resistance when you're on the daily time frame. So now that we've marked off on the daily, we move on to the 4 hour. And what we do with the 4-hour time frame is we change it to green. Let's change it to green and leave it the same thickness as the daily. Actually, no, let's change it to lime green such that it's a bit brighter. Lime, rather. You can be able to see it much more. The touches there. There's a median touching area here, as you can see. There's touches here. 1, 2 touches. There's touches in this zone. 1, 2. So in between the daily support and resistance, you should probably find 2 to 3. At most 4 4 hour on the 4-hour time frame. Yeah, at most 4 support and resistance lines on the 4-hour time frame in between the dailies. You can see the touches here. You see that mostly it's hitting the wicks, so it's very marginal. It's very marginal. So now that we've plotted our support and resistance on the weekly, on the daily, and the 4-hour. Now what we do is we go to the 1-hour. That's where we are looking for entries at most times. If I can illustrate to you one thing that we should actually realize, especially after plotting the support and resistance, is uh, let's look at the price, right? Let's analyze the price. I know the chart is cluttered, right? It's a whole list, but let's look at the candlesticks. Let's look at the price. So the price first almost hit a triple top here. What I mean by triple top is this top, the first, the second, the third. Then it fell down, then which is it pushed, and then there was exhaustion in the market, meaning that there were less sellers up until this point where it found resistance, and then it dropped again. Kept on pushing. So this was the first push, exhaustion, another push up until it got here at the bottom at the lower low from here, and then it had an engulfing pattern, then quickly broke structure here. So the market broke structure here. So when it broke structure here, it went up, then retested that zone where it had broken the structure, continued in its uptrend, it made a higher high from here, first higher high, higher high, and then it also came after it broke the structure again, it came and retested it, then went high, which is on its way, currently it's on its way to form potentially another new higher high. So we can see that price is on an uptrend before I even put my moving averages or anything, of which I will install them just now after we look at the daily as well, so we can see the exact same scenario happening. So especially from here, I want you to focus from here when it broke structure here. So market broke structure here. Broke structure. What we mean by breaking structure, because the market, if you can look from here, the market was making lower lows, lower lows, lower lows up until this point, and this was a lower high, lower high, lower high, lower high, up until this lower high was broken here, which means now structure has been broken. So what I mean by structure has been broken, if we were to draw a trend line here, we would realize that structure has been broken because the trend line has been broken, and the trend line was broken, then retested here, then price went up. So that structure being broken. So that means the downtrend is ended. We're now on an uptrend. After this happened, we realized that the market, after it broke this resistance, which is now a new support, the market went up, and then it came and retested. It came and retested it. It didn't fully retest it, but it's in the zone. It's in and around. Remember, we put the median. So in and around this area, it came and retested, and then went up on its uptrend to form the new higher high. So this was the first higher high, then went up and formed a higher high here. Then came down to form a lower, a higher low. That's a higher low. So it kept on making a first higher low, second higher low, third higher low. At the same time, came again, fourth higher low. And if you look on the patterns, right, it keeps on moving from those higher lows using our reversal candlestick patterns. The first one here being the engulfing pattern. Here almost like a morning star, but in a 4 candlestick pattern movement. This is almost like your morning star as well, and up. So if we can see, this is a push, and it's likely to continue pushing to form a new higher high, and then from there exhaustion. So remember, the market, after a push, it will exhaust. After every push, it will exhaust. So now let's look at the trend, how we actually identify the trend, which I use my moving averages to identify the trend. So I insert indicator, moving average. Let's start with the 8 EMA. Let's make it green, or rather let's make it blue. Then let's put the 21 SMA. That's a simple moving average indicator. 21 SMA. Let's make it red. Right. So from this, looking at this, how you actually read the trend by looking at the moving averages. When the 21 SMA is below the 8 EMA, it's an uptrend. When the 21 SMA is above the 8 EMA, it's a downtrend. Yeah. So this is what I said. When the 21 SMA is below the 8 EMA, it's an uptrend. And when the 21 SMA is above the 8 EMA, it's a downtrend. So now, if we look on the weekly time frame here, USDJPY, the 21 SMA is below the 8 EMA, meaning that we're in an uptrend. So remember, the larger time frames always trump the lower time frames. So if you read it from the larger time frames, it's much easier for you to enter your trades. So we'll break it down. From the weekly, we move on to our daily. If you look on the daily, red is still below blue, meaning that the 21 SMA is still below the 8 EMA. So we're still in what? In an uptrend. So we're still looking to buy. Remember, in Forex trading, the key thing is the trend. And the number one rule that you should always know is that the trend is your friend. So you're always looking to go with the trend, never against the trend, because if you go against the trend, you'll get burned, you'll lose your money, you'll blow your accounts. But if you keep the trend as your friend, that's when you make money and find the right trades. And that's when you start holding your 50, 100, 150, 200 pips easy, because you're just following the trend. So what I mean is, let's say if you're following the trend from here, if you got in from this pattern here, already you would have been holding, yeah, about 220 pips on USDJPY alone. And that's just by following the trend that it's an uptrend, you're always looking to buy. So you're waiting for buying signals, for confidence in the market for you to buy. So as you break it down to the 4 hour, which is the last way we really see and look at the trend, or where in terms of the direction of the market. So if you can look, the red is still below blue, meaning we're still in an uptrend, and the price is still trying to push to make new highs or higher highs. What I mean is, if you can see here, this is the first high, second high, third high. So the market is potentially trying to break this resistance to make another higher high to continue its uptrend. And if you can look at the market, what it's doing, it was making what I call higher lows. So the first higher low, second higher low, third higher low, meaning that this means that the next low is higher than the previous low. That's what higher lows mean. Higher low, higher low, higher low, higher low. And the market is potentially going to make a new higher low after making a higher high. So now that we've identified our trend as being an uptrend using our moving averages, we now turn to our to more of our technicals as well, like our support and resistance and our trend lines. So since we've already plotted our trend, our support and resistance rather, now next is we plot our trend lines. So I like plotting my trend lines mostly from the daily time frame and then the weekly as well, but mostly the daily time frame and the 4 hour. Because it's much clearer when I look at them from there. So mark off this point, we'll start off here. Week to week. We always aim to get it week to week. So from this week to this week. To week. So if we zoom it in this week to this week, then if we go to the 4 hour, that's when we realize that there's actually an uptrend, and we can take it from this, bring it up. Actually, let's take it from here. The first higher low, then bring it up. So let's zoom it in so we can be able to see. Okay, so it's week to week from the first week, from the first higher low to the next higher low into the future. So as you can see now that the price kept on bouncing off the trend line, And what I want you to realize is there was always confidence in the market. What I mean is there was confidence in the market is from this zone or from this area, after making the first higher low, market broke resistance. So it broke it with this big candle. So after it broke it, it came and retested, and it retested this resistance, which had turned now into support. Remember, when resistance is broken, it's now the new support. It's the newfound support. So when this resistance was broken, this area was now the newfound support, and where there was the newfound support, there was the trend line as well. So there were two things in the market that were aligning. And one thing that I want us to check, although I won't cover it full in this video, is I want you to check the Fibonacci levels. Our Fibonacci levels were, it was a 38.2. Yes, it was a 38.2% retracement. So I'm going to cover that more in the next videos, but there was a fib level as well there. So that was three things aligning, meaning that's confluence in the market. That's three reasons for us to buy, three reasons that are aligning in one direction. And remember, the more the reasons, the better your entry. So I always look at two, especially two. And the two most important ones are your support and resistance and your trend lines. You, when you're doing your technical analysis, the two most important things that you have to keep in mind are your support and resistance and your trend lines, because that's the foundations of Forex. That's where you can see your price action much clearer. That's when you see your trend much clearer as well. As you can see here, it's a beautiful, nice uptrend where it's been bouncing off the trend line and it's continuing. So here there was confluence with the trend line and the daily resistance which turned into support. Here at the same time, also there was a daily resistance which turned into support, which it after this push, this exhaustion was clearly obliterated by this full engulfing pattern. And then after this push as well, this exhaustion or retracement, it bounced off this trend line as well and off this weekly resistance which turned into support. And it has started forming on its way to the uptrend, although it's rejecting on this resistance. So it will be interesting to watch how it plays out here, because a break above could potentially lead into new prices or new higher highs. So it would form a higher high. And then yeah, the one thing that before I close this video, the one thing that I wanna articulate to you guys is I want you to focus on these pushes. Focus on this push. Like whenever the market pushes or moves up, there has to be exhaustion. So you just have to be patient enough to wait for the exhaustion so you can get a nice price entry or a nice buy order if you're looking to buy in the uptrend. So after every push or every move to the upside, it has to exhaust. The market has to breathe. So it has to breathe. And then again, if you can look here, push above, exhaustion. So there's always a retracement. Like the market will never move in a straight line, it will always follow a trend. So that's why remember the trend is your friend. Because if you can just ride this trend and continue going on the up, then it's much easier for you to make money and it's much easier for you to stay in profit and to be profitable. So yeah, focus on your support and resistance, sorry. Um, Focus on your trend lines and focus on your Fibonacci retracement, on the Fibonacci retracement tool and extension tools, which I'll cover in the next conference videos as well. And then also focus on your supply and demand zones. And yeah, once you do that, then you should have perfected everything. So what I mean by that as well, I'll just include a segment, a short, small segment on supply and demand zones. So we can at least have much more information on it. So I'll just insert like a supply and demand is more say support and resistance, but the difference now is that a supply and demand zone is more of a zone. So it's an area. It's an area where the price has been very sensitive in it. Whenever it got the price was sensitive. So yeah. So you draw it from the wick of the candlestick going in that day. In the let's say if the price was moving up, we draw it from the wick of the candlestick going in the preceding direction up to the close of the body that's moving in the direction that it's breaking out to. So like here the price broke out to the downside, so it's the wick from here to the body of the red one where the price broke to the downside, which lead us to a supply and demand zone here. So you realize as well that whenever it got here, it rejected because it was by a zone. Whenever it got here, up until when it broke it and retested that zone. So it was a very, very significant area, and it was a very, very significant area, to put it that way. So if we continue, you see from here, price was moving up, then it broke to the downside with this candlestick going down. So draw it from there, from this top of the wick to the close of the body, going down. So once you realize that, again, once price broke it, it came and retested that zone. So there was very much confluence in that. There was your supply and demand, there was your support and resistance, there was your trend lines. So three things aligned. It came and retested that zone again. And we'll try draw it here once again. From the price broke, it was moving up, then it broke to the downside from this candle. That's when it went to the downside. So draw it from the wick to the close of this body. So from those wick to the close of that right body. Yeah, perfect. So you can see the zone that once again, once price broke to the upside above that zone, it came and retested in that zone again. So it's a double retest. You could have entered here first time. If you missed it, then you could have entered here second time. So it gave you two chances to enter, guys, like two chances for you to buy. Yeah, so on here, as you can see, you see that I'm focusing more mainly on my support and resistance, my trend lines, my supply and demand in my Fibonacci retracement tool, which I'll cover later as well, as I've mentioned. So by just focusing on those, you keep on monitoring your charts and having patience. Because the key thing that I always emphasize is patience. The moment you have patience, trading becomes easier for you because you're waiting for setups, you're not looking for setups. The moment you're looking for setups, you most of the times find wrong trades. But if you wait for your setups, which means you've already um, plotted your support and resistance, you've plotted your trend lines, you've plotted your supply and demand, and you're waiting for the trade to reach your criteria or the setting criteria that you have in your trading plan. Because like for you to enter trades, it has to meet a certain criteria. Like an example, my criteria is at least two um, either or, at least two either of support and resistance trend lines, supply and demand, or Fibonacci levels. It has to have at least two of those. So at least two, and then being three, that's even much more precious. Four is like gold. That's meaning that trade is most likely to pay. So an example of the trades that I'm meaning, like this one, there was a supply and demand zone, there was support, and there was a trend line. So that's three things aligning. That's like almost gold. That's like the perfect entry. And if we were to look on our Fibonacci as well, that was a 38.2. We measured it before, and yeah, that was just a perfect entry. You would have killed the market. Yeah. So yeah, guys, that concludes this video. I hope we all enjoyed it, and I hope you take a lot from it and you gain some knowledge from it. And yeah, you kill the market, and so let's make money. You know, learn the market and make money. That's my advice to you. Just keep on focusing, work hard and smart, and put in the effort. The results will show on themselves by themselves. And yeah, let's kill it. See you on the next video.